Welcome to the Wednesday edition of the Tech Stocks Daily Podcast. Get ready to sizzle as we dive into Microsoft's mighty moves with their diversification triumph and slicing returns. Curious about Apple's latest AI adventures and election night surprises? We've got juicy details. Meanwhile, Fortinet's gearing up like a cybersecurity superhero, and we'll spill the tea on how Oracle's grabbing market buzz with electrifying trades. Whether you're a seasoned investor or a tech aficionado, today's updates will keep you on the edge of your seat and your stock watch list on alert. Tune in, stay informed, and let's get tech savvy together. All right, tech lovers and stock enthusiasts, buckle up because today we're diving deep into the tech behemoth poised to rule them all, Microsoft. In the buzzing realm of NASDAQ, why is Microsoft stealing the show? Let's break down the top reasons everyone is talking about this towering titan. First things first, folks, diversification. That's not just some fancy Wall Street lingo, it's practically Microsoft's middle name. Microsoft isn't just existing, it's thriving across a spectrum broader than your wildest brunch spread. This company's influence extends far beyond the confines of Word docs and Windows screens, touching everything from cloud computing to video gaming, artificial intelligence to enterprise solutions. It's as if Microsoft has its hand in every tech cookie jar around, except phones, because, not even giants get everything right. But what's the key factor keeping Microsoft racing full throttle in a tech industry known for brutal competition? It's their incredible return on invested capital magic trick. Picture this. Microsoft's been strumming its financial guitar to the sweet tune of a 28% average ROIC since 1989, transforming what used to be a mere $1,000 investment into a crescendoing $6.8 million jackpot. La la la, sing with me. Those are some epic financial feats. Hold up, it gets even better. Safety nets aren't just for circus daredevils. Microsoft's balance sheet could outshine Fort Knox. How? Well, imagine having a AAA credit rating. Yup, only one of two public companies with this shining badge. And yes, the US government slots in slightly after with an AA+. So Microsoft above Big Bro on creditworthiness? Yep, consider us impressed. But wait, don't sleep on their dividend history just because you're here for stock price appreciation. Microsoft's been serving up reliable dividends for 22 straight years, and it's not some dinky payout. Their dividends have been climbing at an annual average of 11%. Basically, it's like finding an extra cookie in your jar every time you sneak in for a nibble. How sweet is that? And while we're on the topic of smashing expectations, check out Microsoft's recent fiscal performance. Left, right, center, its business arms are growing in double digits. Their Q1 revenue for fiscal year 2025 soared up by 16%, proving this powerhouse simply doesn't slow down or faceplant. Now let's chat about the sparkly tech unicorn known as AI. Microsoft isn't just riding but turbocharging the AI wave, injecting this transformative technology across its wide-spanning services and beefing up Azure by pouring resources into cutting-edge data centers. It's panning out to be quite the lucrative endeavor, setting the stage for sustained future growth. So whether it's the monotone hum of Azure servers or the iambic serenade of increasing dividends, Microsoft is striking high notes across the board. Keep your sights set on this tech giant as it continues its captivating dance through the tech world, suggesting firmly that it's not just surviving, but thriving. Oh, buckle up, folks, because today we're diving into all things Apple, a company that's been busier than a caffeinated beaver during dam season. Apple's been in headlines for three primary reasons, touching on its financial prospects, product innovation, and a cool new feature that rocked the world of iPhone users everywhere. So grab your AirPods and let's break it down. First up, Apple gave investors a bit of a heads up. It's shifting focus towards artificial intelligence and virtual reality market trends, which could slightly rock the boat revenue-wise. Why, you ask? Well, they're pumping up investments in new technologies, signaling potential risks to the kind of profit margins they've enjoyed with their iPhones. Yep, the iPhone, with its slick design and astronomical prices, has been quite the cash cow for Apple over the years. But as Apple embraces AI with its Apple Intelligence features and even entertains the idea of ChatGPT integration into Siri, they sure hope that this gamble pays off. Watch out, Siri might soon become not just a know-it-all, but a really smart know-it-all. Despite these risks, Apple's stock still shows pretty little signs of fearfulness, having risen over 20% since the start of the year. Analysts predict continued demand for Gen AI capabilities in upcoming iPhone models and remain, shall we say, cautiously optimistic about the future. Interestingly, Apple's focus on services like its App Store and Apple TV also continues to pay off, big time. Moving on to headline number 2, Apple's financial showing from its fiscal Q4 was in, and boy did they deliver a whopper. Not only did they clock a 6% revenue increase, reaching a cool $94.93 billion, it appears the Apple cart has known some minor upsets alongside it, such as concerns over advertised Google services due to potentially shifting patterns with Alphabet's antitrust hand. Globally, China reportedly stayed pretty flat, though Apple mentioned Greater China coordinating things well enough to maintain its status as the urban darling in smartphone circles. And for all those wondering, they capped their quarter with approximately $157 billion in moolah and $107 billion in debt, having repurchased $25 billion of stock along the way. Now let's get a bit glitzy with Apple's latest technological ingenuity, turning election night into notifications delight. Apple introduced a fresh feature through their Apple News app that lets users get live election updates straight to their lock screens via Dynamic Island. Whether Trump securing key states excited you or waiting for your candidate's victory felt too nerve-wracking to miss, technology intervened. Social media users applauded it as what the ghost of Steve Jobs would have liked the feature to do, while others only enjoyed it until a few vivid smartphone crashes chimed in with a digitized chuckle. In summary, Apple is gearing up to dive into AI with spirited zeal. They demonstrated fiscal prowess this quarter, and they've taken an innovative swipe at keeping users hooked with their device's live functionalities. So next time you're unlocking your phone, remember, Apple just wants all screens across the world to stay equally dynamic. All right, folks, let's dive into some Fortinet fun. This cybersecurity heavyweight is making headlines ahead of its third quarter earnings report, scheduled to drop like a new album release this Thursday. So why are all tech eyes on Fortinet? Well, you see, they're stepping onto the earnings stage with Wall Street expecting them to crank out an EPS of 52 cents and revenues hitting a high note of $1.48 billion. That's no small feat. Fortinet's been riding the cybersecurity wave like a pro surfer, especially with the soaring demand for identity and access management solutions. Interestingly, the IAM market is forecasted to double, going from $23.5 billion in 2024 to a whopping $47.1 billion by 2028. Talk about some serious digital gold rush prospects. Fortinet's strong play, their security fabric and AI-powered solutions, which make them a go-to for enterprises looking to untangle the complex web of cyber threats, particularly as more businesses shift to the public cloud. What truly sets Fortinet apart is not just their tech prowess, but their commitment to human capital. They're addressing the gaping cybersecurity skills gap through their training institute, ambitiously aiming to train 1 million security professionals by 2026. That's like forming an army of cyber defenders ready to tackle the villains of the digital realm. Talk about superhero vibes. On the stock market front, Fortinet stocks have been quite the conversation starter. Although they've encountered some recent selling pressure, the price remains above their short and long-term moving averages, suggesting the outlook is overall bullish. Technical indicators like the moving average convergence-divergence and the relative strength index sweeten the stock scenario, backing up hopes of further upside movements, despite a little short-term turbulence. Analysts are playing it safe yet positive, with consensus ratings sitting at neutral, but with a glimmer of optimism in price targets hovering in the $73.96 to $86 range. It sounds like even the skeptics have a bit of shine in their eyes when it comes to Fortinet. To zoom out a bit, they're not just keeping pace, but actually outpacing many of their peers in the computer and technology sector. With a year-to-date gain of around 33.1%, Fortinet is showing that it's more than capable of jumping over hurdles and making a splash in the grand cyber realm, clearly outperforming an industry average of 26%. In contrast, another shining star, InterDigital, is sitting pretty with an even more striking 55.6% return. Yet, everything's more fascinating in context, with Fortinet lending more bright notes to the cybersecurity tune within the internet software industry. So folks, whether you're sipping tea, coffee, or just basking in your love of tech stocks, keep an eye on Fortinet. Between their innovative cyber solutions and growth strategy, exciting times are definitely ahead. Tech dev blogs, watch this space. Hey tech enthusiasts, let's dive into why Oracle made quite the splash in today's news. The seasoned tech giants seem to have piqued the interest of numerous market whales as we witness some intriguing action on the Oracle options trading front. First off, the financial big hitters have positioned themselves with some bullish vibes around Oracle, igniting chatter and potentially indicating a vote of confidence in the company's future. A deep dive into options history charts revealed a total of 38 trades that stood out, a flurry of activity if you will, indicating some serious bets. Now equally split at 39% for both bullish and bearish movements, it's fair to say traders are expecting something to shift dramatically. The bulk of this action was focused between the strike prices of $90 and $195, suggesting Oracle's diverse potential as seen by market wizards. If Oracle keeps moving within this range, we're likely in for an electrifying ride. But what's really catching our attention is what analysts have been saying about Oracle's future. With updated ratings and price targets, Oracle is hitting different chords with different analysts. While some, like RBC Capital, are taking a more cautious stand and revising their ratings downward to sector perform, others like JMP Securities continue to rally behind the Silicon stalwart with a market outperform rating. Despite these varied stances, one thing's for sure, Oracle's got the spotlight on it, and its anticipated earnings post has folks on edge. The stock has returned 1.5% over the past month, but wait, there's optimism in the air. Analysts anticipate a 10.5% earnings growth compared to the same quarter last year. Sprinkle a little Zacks rating mystique into the mix, and we've got Oracle holding a rank number 3, which essentially says, watch this space. Fundamentally, Oracle's on a quest to grow its revenues, and with a projected year-over-year sales increase of around 9 to 11% over the next 2 fiscal years, investors are evidently hopeful. However, the D grade on the Zacks value style score tells us the stock might be a tad overvalued compared to its peers, a signal to the discerning buyer. The buzz, Well, it's about whether Oracle's performance will align or even outperform the broader market, an actual to potential value matchup that's thrumming. Now onto the fun part, my tech chums. What's your spin on Oracle's current positioning? Do you reckon these whales have placed overwhelmingly wise bets, or is the cautious undertone of some analysts warranted? Comment below, and let's have a tech tete-a-tete over what you think Oracle's next move in the digital chess game will be. Your thoughts are gold, so share away. All right, folks, let's spotlight Apple for today's hot take. This Cupertino giant is stirring the pot with a lot at play, from their economic showing to technological innovations. But the big question, would I buy, sell, or hold if I had Apple stock? First, despite some potential profit margin risks due to AI and VR tech investments, Apple's stock has risen over 20% this year. The company continues to tantalize investors with new innovations, such as enhanced AI features and that snazzy election night live update tool. The holiday season might also serve as a tailwind with new product releases. So here's my take. If I had Apple shares in my pocket, I'd hit that hold button like it's my favorite track. Apple has consistently proven its financial dexterity and ability to pivot into new territories with success. They capped their fiscal quarter with impressive revenue numbers, even with potential wobbles from Alphabet's regulatory maze. However, as always, the stock market isn't crystal clear. So taking a cautious perspective as Apple trudges new tech terrain, such as AI, wouldn't be reckless. The company's ability to maintain good performance makes it an appealing long-term play despite near-term shifts. Remember, every tech adventure is a ride, and while holding, keep an ear to the ground for how these emerging markets unfold. But hey, listeners, this isn't financial advice. Always do your own research before making investment decisions. Understand your risk tolerance, dig into the numbers, and stay informed. Stocks can be unpredictable, just like trying to understand the lyrics in a new Beyoncé song. We love her anyway, right? Now go, techies, conquer that knowledge. All right, techno whizzes, let's wrap up today's NASDAQ shenanigans. Microsoft's flexing its diversified muscles and magical ROIC, Apple's high on innovation while balancing some AI-infused jitters, Fortinet's surfing the cybersecurity wave like a rock star, and Oracle, oh Oracle, simmers with some intriguing market moves and analyst buzz. The tech world never seems to rest, and we've got front row seats to all the action. If you found this as exciting as a new gadget unboxing, smash that like button, subscribe, and share the tech love with your friends. Don't forget to tune in tomorrow as we dive headfirst into another day of zippy tech news. Stay curious and tech-tastic, folks.